A seismic shift is underway in global finance, not with tanks, but with currencies. At the center of this transformation is Russia, making a bold move to steer its economy away from the US dollar. This isn't just a policy change, it's a direct challenge to a world order dominated by the greenback for nearly a century. The impact stretches far beyond Moscow, affecting economies and wallets worldwide. For decades, the US dollar has ruled global trade, the currency for oil, loans, and central bank reserves. Russia's decision to sidestep this system signals growing dissatisfaction among major powers. The dollar's dominance is seen as a tool of US foreign policy, one that can impose sanctions and exert pressure. Now Russia is building an alternative, aiming for economic independence and a new set of rules. If other major economies like China and India follow, the dollar's supremacy could face its biggest challenge since World War II. The global financial system may be on the verge of a historic transformation. This is more than a financial headline, it's a geopolitical event with profound consequences. The world is entering a new, uncertain economic era, and Russia is a primary architect. The pieces are moving on the chessboard, and the game has just begun. The stakes? The stability of global markets and the value of national currencies. Russia's move is a declaration. It no longer wants to play by the old rules. The world is watching, and the outcome could reshape the future of money. What has Russia actually done? It's called de-dollarization, a systematic effort to reduce reliance on the US dollar. Russia has sold off US Treasury bonds and boosted reserves in gold and Chinese yuan, diversifying its wealth and reducing vulnerability to US sanctions. The motivation is clear. After Western sanctions in 2014, Russia saw the dollar as a potential weapon against it. De-dollarization is a defensive measure, building an economic fortress against future pressure. Russia now promotes the ruble and other national currencies in trade, striking deals with China and India to bypass the dollar. When Russia sells oil to China, payments are settled in rubles or yuan, avoiding the US financial system. This reduces costs and shields transactions from US oversight. The core question: why should two sovereign nations trade in a third country's currency? By creating alternative payment systems and using local currencies, Russia aims for greater monetary sovereignty. It's a long-term project to reshape economic relationships and reduce dependence on a politically hostile system. The goal: insulate Russia from geopolitical shocks and rewrite the rules of global trade. Russia's de-dollarization is sending ripples through global trade. The most immediate effect? Fragmentation of the international payment system. Russia's SPFS system rivals SWIFT, creating parallel tracks for payments and complicating global trade. As more trade happens in rubles, yuan, or other currencies, demand for the dollar weakens. Russia's insistence on ruble payments for energy forces buyers to acquire rubles, boosting its currency. This chips away at the dollar's monopoly, one transaction at a time. Countries like India now face tough choices: stick with the dollar or adapt to new payment methods. The result could be a more regionalized global economy with distinct currency blocks. Trade within each bloc would use the dominant regional currency, making cross-bloc trade more complex. The era of seamless, dollar-dominated trade is giving way to new frictions and uncertainties. The US dollar's dominance is built on trust, deep markets, and the size of the US economy, what's called the exorbitant privilege. This lets the US borrow cheaply and wield global influence. But Russia's moves are challenging this fortress. Toppling the dollar isn't easy. No single currency is ready to replace it. The euro has internal issues. The yuan isn't fully convertible. Yet, US sanctions are making other nations nervous, driving them to seek alternatives. Even US allies are exploring ways to reduce dollar dependence. The likely future? The dollar remains dominant, but shares the stage with the euro and yuan, a first among equals. The result? A more balanced but more complicated global financial landscape. Russia isn't alone. It leads a coalition of emerging economies, the BRICS group. With new members like Saudi Arabia and the UAE, BRICS now wields major economic and energy power. Their goal, a multipolar world order, less dominated by Western interests. They've created their own institutions, like the New Development Bank, funding projects in local currencies. There's talk of a shared BRICS currency, possibly backed by commodities, to settle trade and bypass the dollar. The addition of oil giants like Saudi Arabia could end the petrodollar era, with oil priced in other currencies. If major producers accept yuan, rubles, or a BRICS currency, the dollar's dominance could be shaken. The global financial system is being rebuilt, one deal at a time. These geopolitical shifts have real consequences for everyday people. For Americans, a strong dollar means cheaper imports. If the dollar weakens, prices for gas and groceries rise. For other countries, a weaker dollar can ease debt burdens, but shrink the value of dollar reserves. Central banks face tough choices. Rely on the dollar's stability or hedge against its decline. Exchange rates could become more volatile, complicating travel and business. US Federal Reserve decisions impact global borrowing costs. In a multipolar world, that influence would be diluted. Other central banks would gain power, creating a more decentralized monetary system. The result, new opportunities, but also new risks for economic stability. The world stands at a crossroads. Russia's move away from the dollar and the rise of BRICS signal a deep structural shift. The dollar isn't collapsing, but it's evolving, from global monarch to senior member of a diverse currency club. This transition will bring more financial volatility and geopolitical competition. Countries will form new partnerships and rethink old ones. The real contest is between different economic models and financial systems. For businesses and investors, diversification across assets and currencies will be crucial. The financial world is fragmenting, and those who adapt will thrive. The US dollar will remain a major force, but its exclusive grip is loosening. The journey to a multipolar currency world has begun, and its pace will shape the future of global finance.